Hello, it's August 2025 and it's time for the portfolio review again. So it's been a consistent theme for the past 3 months. It's again an all-time high. My portfolio is up 22% from last month's 19% or so. So this month the portfolio put on another 3+% of gains, and the dividend is up 20% year to date as well, similar to last month actually. So this is the latest NAV of 2.31, it's up 3%, and the month before was like 8 to 10% up, I can't remember, something like that. But it's a new all-time high again, a new watermark. And this is the constituents of the portfolio. Top 20 are here. The top 20 constituents make up 87% of the portfolio value. Capital is at 15%. Capital has done extremely well this month, closing at 8.7 or something. This is despite a big, rather decent sell-off on announcement of the M1 sale. I think people were expecting a bigger sale or something, or maybe for them to make a profit. I'm not very sure actually. But on the announcement, it went to 8.8 or 8.9 or something, and then subsequently just sold off massively to like 8.2 or something. But Capital did a share buyback as well. They have 500 million of buyback to do, so that has supported the price a fair bit. The rest of the portfolio has been gaining as well. KSH has done extremely well this month. I think some funds have been buying to KSH as well. I think this is extremely undervalued though. This position has doubled for me. Kingspan did well, but the market sold it off after the first half announcement. I think people are expecting bigger profits. But I think you should look at the full year results for a better understanding because they're project based, right? Um, of course, the listing of the China REIT was approved, and the CLCT had some good movement as well. I topped up my CLI, so now it's moved up the ranks, occupying 3% of my portfolio already, and the rest of the business are kind of the same. So what is noticeable is that the REITs have underperformed the general markets. It's up just 10%. My non-REIT SGX stocks is up 32%. So overall it's up 22% or something like that. Dragged down by the REITs. I think it remains to be seen what happens for the second half of this, or the last 3 months, for the last 4 months of this year. Because it's expected for the Fed to be cutting rates in September. Maybe one or two more, I'm not very sure actually. So maybe when they cut the REITs will ready. I'm not very sure actually. But so far REITs have underperformed the market, just up 10%. Non-REITs have done really well in SGX, up 32%. Because of this outperformance of the non-REIT component, my weightage of the REITs in my portfolio has fallen. So I was thinking whether I should take my dividends coming in for the next few months and redeploy them to REITs, or should I go somewhere else? I'm not very sure actually. The point with the REITs is that although it has underperformed the rest of the stocks, but it has recovered quite a fair bit from the lows. So I'm quite hesitant about buying at these levels, just in case the Fed reverses course and turns hawkish and everything collapses again. So a better thing to do might be just to hold cash actually. I'm not very sure. So I'll have to see what happens. I've been thinking about what the impact of the falling US dollar would be though. It seems to me that the dollar is on a declining path. So you look at the purchasing parity. I think the dollar is overweighted by like 10% to 15%. So what happens if the dollar really corrects and the US dollar falls? What will happen? I'm not very sure actually. So this is something I've been thinking about. And also, the tech capex, especially with all the capex into AI by the American tech giants. If you look at what happens in China, Alibaba and Baidu and stuff, none of them are making a decent return on the capex on the cloud, on AI. I mean, so what happens in the US? If are they spending way too much on AI, and is this AI a bubble or not? I don't think it's as extreme as the internet bubble in the 2000s, because I do see benefits of AI, but they might be overspending, and I do think that the returns on capex is not really justified for a lot of people. I do think there's going to be a lot of debt or hubris though, a lot of content generation software like maybe those used for content creation are going to suffer because AI is just going to make all this stuff redundant. Also, the impact of data centers. Is there a glut of data centers, or is it not so? Especially since I have a big position in Mapletree Industrial Trust. So is the data centers in the MIT really going to be obsolete, or is it not? So that's something I have to think about as well. But nonetheless, the position in MIG is not that huge. It's what, 5% or something. I don't think it's gonna go to zero. So maybe a bit of downside, but maybe there'll be upside as well. So those are the things I have to consider for the next few months, or thinking of how to deploy my capital, which is our dividends to be coming in. So have an enjoyable August.